Hello traders, welcome to another Trade Your Way video. Today we're going to talk about my divergent strategy. We're going to go into some detail as to how I use it, how I used it to help me pass the FTMO challenge, also how it works for anyone who wants to understand a little bit more about divergence and what divergence is all about. We're going to go into that as well, and really just to give you an idea of this strategy and how powerful and also how simple it is to use. So without further ado, let's dive straight in and take a little look. I just want to give you some examples before we start and give you some idea of what it's all about. So divergence, what is divergence? Well, if I pull up this this illustration, what it shows you is prices moving nicely up, it consolidates, and then we see a breakout. So we break out of the high in this example. We've broken out the high and we're extending. So with it making a new high and with it extending, you know that it's going to exhaust. The move is going to run out of steam. It's not just going to keep going up and up and up and up and up in a straight line. It needs to take a breather, pretty much like it's done in this example here with the move. So it moves, pulls back, moves, pull back. So it's a trending market. Then it stops for a breather, consolidates before making another final push up. Now it's that push up that we want to measure, and we want to look for divergence, and divergence is caused by the exhaustion, because what we're seeing is volumes pushing the price up, but the divergence is starting to form here to tell us that even though we're going up, the volume is actually going down, and that's when you get divergence. So you'll get, in this case, it's highlighted for you on this example here on this pound dollar trade. You'll see it here where its volume is going down. So we have, in this case, what we call three wave. So 1, 2, 3, three wave divergence. Each time you see prices pumping up. So prices going up, yet the volume is going down. So it's telling you that at some point it's going to run out of steam and it's going to turn around. In this example, we've seen, in actual fact, some very deep corrections, very deep pullbacks. And this is a 4-hour chart, so 4-hour time frame. So this is 4-hour price action, and this is a pound dollar. And this is going back to around December time, end of December, and then as we come into January, we have another push up, but yet we still see divergence. So each time it's pushing up and making new highs or attempting to retest the previous high and try and push up there, it's not you know, you can see the volume's very thin and the volume's starting to go down. So that's when you see divergence. So it's diagonally positioned facing downwards here, despite price facing upwards there. So they are correlated. So let me just explain that, the guide for my strategy, and explain the rules, if you like. So what we use is the awesome indicator, or the awesome oscillator. You can find that with any trading software. Often most people use TradingView, it's on there. We focus on the 1-hour time frame, the 4-hour time frame, the daily, weekly and monthly. So we always do top-down analysis starting from the higher time frames. We'll use either or both the monthly and the weekly to start and look at analysis. Then we drill down to the daily, 4-hour and 1-hour. In this case, we had divergence across a few of the higher time frames, but I'm just going to show you the 4-hour chart because it shows it quite cleanly. And we've got, as I say, with our awesome oscillator, we have 3 wave divergence, which is quite powerful because 3 attempts to go up and 3 times it failed. We use the 3 key Fib extensions. I'll go into what they are, and also how they're used to provide the entry and the stop loss. And the T1 is always back to the 100%. So wherever it extends to, in this case, it was a bullish move, trending upwards. And so we were looking for the pullback, the exhaustion and the pullback to test previous structure, which is back to where it broke out from. So that's what back to 100% means. And it's much like the 764 strategy. For anyone who's watched my 764 strategy videos, you can understand that when it gets to these levels, it may run out of steam, and it could be the start of a trend change. So we might actually have gone up and up and up in this case, and then we've run out of steam, and we might start to see a bigger correction that turns into a bigger sell-off. So this is why divergence is so important, and this is why I have a divergent strategy, because for a lot of traders, they're very impatient in how they trade, and they're constantly trying to guess, if you like, give their best guess in terms of where the top is or where the bottom is. So what do I mean by that? Well, they're trying to guess where the price is likely to run out of steam and turn around. So they're calling tops and bottoms. Now, the problem with that is if you don't know which are your key levels and you don't know where price is likely to be exhausted and turn, what you're going to do is you're going to try and say it's in an uptrend. You're going to try and short it because you think it's gone up enough, but yet it just busts on through your entry, keeps going up, goes through your stop, stops you out, and then when you've given up all hope of it going down, then it goes down, but not before stopping you out and taking your money first. So what you're doing is providing extra liquidity to allow price to go up higher, and the same to the downside. So patience is key, and understanding that you don't need to keep trying to call the tops and bottoms because that is a sure way of losing money. So this is how this strategy was born, to help you correctly identify, or more accurately identify, precise entry points, knowing exactly where price is likely to run out of steam and change direction. So that's what these rules are. Let's move this out of the way so you can actually see that. So let's talk about the Fib extension levels. So the Fib extension levels are the 127.2 Fib extension, the 161.8 Fib extension, and the 176.4 Fib extension. So there they are. These are the fibs. So what do I mean by that? Okay, so these are the levels that are normally in play within a range. But what happens once you make an extension and you start breaking out of the range? So what you would do then is, generally what I do is I have a couple of different settings for mine, but just for the purpose of this exercise, I'll just manually remove the fibs that are no longer being used, no longer valid. And so the ones we're left with are the three key Fib extension levels that we're talking about today that give us our divergent strategy. So in this example, we've attempted to go higher, each time pulling back and doing a liquidity grab and a fake out to the upside, and it's the same as you've seen here on this 4-hour chart. This is also 4-hour on the pound dollar, but just to give you a bit more clarity. Also, just to go back, this is the sort of price action that you are seeing here is in this illustration. So it goes up, a fake out to the upside, and or necessarily it may well have hit a Fib extension level before dropping back. And so what happens if it's the start of a trend change? It drops back down, at least back to where it broke out from. In this case, it's showing that it's stabbed on down through, which often is the case as well, just to stop everybody out, liquidity grab. Because where do people put their stops? If they're going long on a breakout, well, they're going to put their stops just below where it's broken out from. So in this case, it could be here, but then they'll move their stop up to here once it breaks out. So what does the market do? Well, the market knows that. It can see your orders. So what it will do is it will just stab on down through, suck in all those stops, take out all the stops. Then it has the power to continue to the downside. And perhaps it will do something like this, like a retest of where it broke back down through. So retest, and then away it goes. So this price action, there is method to the madness, and this price action is all about really just capitalizing on stop losses and making sure that there's enough liquidity to move the market. And that's what happens. The price will move up and down to suck in everyone's stops and make sure that it's got enough liquidity to make the move. It's typical price action, and for anyone who's been trading for longer than 5 minutes, you'll know this. It's just about understanding a little bit more detail as to price action and how price actually moves and the reason why it moves the way it moves. So let's look at this in some real life example here. Also, if you are backtesting it and you want to backtest this strategy, you need to ideally look for 50 to 100 examples. Best time frames to use are perhaps the 1 hour and the 4 hour, because you'll find a lot of examples. Try and stick to 1 or 2 or 3 pairs that you tend to trade. So 1 to 3 of your favorite pairs. Maybe top 3 instruments could be something like pound dollar, euro dollar, could be the pound yen, could even be gold. Entirely up to you, whatever you tend to trade. But you will find divergence, and you'll find this divergence setting up time and time again. You need the awesome oscillator So here you can see in this example, I'm not going to draw the lines because the lines are here, but you manually put your lines in, and you can see that volume, despite it going all the way up here, making a double top, the volume was a lot lower. So we had divergence. And so we had a double top, and what happened? Well, it dropped in accordance with the volume. Now, just to understand what the volume is, sometimes you'll see these volume indicators positioned vertically on a chart. So you might find them here. Some traders choose to have them along the side, either on the right hand side or the left hand side. But I choose to have it down here because I try and keep my charts clean, so I can put things on them and take them off accordingly. So I've got my EMAs for added confluence, but then I take them off on and off as and when I need them, so they don't need to be there for me. So let's see what happens here with this example. So this is the pound dollar. We are attempting to get up to that 127 extension fib. Let's make sure you can see the numbers as well. So let's move that to the right. So you've got it. And so what happens here? Well, I'm looking for divergence, so I'm looking for exhaustion, and if it can get up there and touch there, and this starts to turn, and this is lower than what we've had previously. So you can see here this volume is lower than here, for example, and this is a lower high to here. So we've already broken above these levels. We're stretching, so we're like, what's going to happen? Also, other confluences to consider. $1.37, nice round number. So what's it going to do? Well, if it goes up there, I'm interested in shorting it. And where's my target going to be? Well, my target is going to be back to the 100%, so back to where we broke out from originally. It's a very notable swing high. So also on here you can see very obvious, very clean. There's nothing before it, and there's certainly nothing after it until we get to here. We start hitting some traffic and starts chopping around and starts stalling, trying to get up there. So it's telling us if it can get up there, we're going to short it back down again. And so this is exactly what we do. So our entry in this case is around 137. I actually got in at 136.70 on this move. So let's see what it does. Okay, so I'm going to talk you through the move and exactly what I did. So we went up. This is a 4-hour chart. We're still going up, not quite there. You've got to be quite patient. There we go. So it's touched it. As soon as it touched it and it started bouncing off it, then we'd start looking for shorts. And sure enough, I did. And it was quite early in the morning. So it was during the London session. As for you, those of you that trade with me, you'll know that I'm up early. I try and get up about 5:30 just to see what's going on with the Asian session as we start going into the European session. Now, sometimes we can get an opportunity like this and we can be on it quite early. So I took a short here, took the position, got in at around 136.70. So where's my stop loss going to be? Well, that's really, really easy. You put your stop loss above all of this price action, so something like that. And where's my target going to be? Well, my target ultimately is going to be down at around 134.85, give or take a pip. Also note there's a 135 round number, so it's basically give or take a few pips. We're looking for a nice 200 pip move back down from 135 to 137. For me, this is a really, really nice range. And it's a really good high probability setup. Everything about it looks good. The way that it's been moving looks good. We've got the divergence showing, it's looking good. And so this is what happens, right? So we've put our trade on, got in at around 136.70, and then we just let it play out. Now, what happens on the first day? I believe this is a Monday, so we're pushing down, and we've had a really nice move down. Now, for me, I would then look for not necessarily for price just to go down in a straight line, because I know what the pound is all about, the pound dollar. Now, this is why it's important to choose 1 or 2 or 3 different currency pairs or instruments that you like to trade, because the idea of doing this and back testing them is so that you are allowing yourself a chance to get to know how they behave and how they move and what's the average daily range of one of these pairs. How much do they move on an average day? So for pound dollar, we on average we're moving about 120 pips or so a day. Now, how many pips has this moved? Well, this has already moved a good 160 pips. So I already know that at some point I want to have a T1 and a T2 for me. So when I say T1 down here, okay, that's fine if you're a swing trader, if you're able to calm your nerves and hold your trade in without worrying. But I'm not a swing trader, I'm an intraday trader. And I know that this is a 200 pip range. It's quite a big range then for the pound. I also know that we have been in an uptrend. So these are considerations that we have to take into account. Because it's in an uptrend, do I just expect it just to drop and sell off? It would be nice if it did and it goes straight down and hits our target. Wonderful. But I'm also thinking and considering all of the above, what I've just mentioned, and saying, well, it may not get down there. So for me, I need to have a contingency. So my contingency, which is applied to pretty much every trade that I take, is to have two targets. Now my T1 in this case was down at 136 because it's a nice round number. I know that we're getting in at 136.70. That's given me 70 pips. I've set my stop actually. I remember my stop was at 137.05 and price did go back up and retest 137.04. So we almost got stopped out by 1 pip, but that's because you see how accurate, it just goes to show how accurate and high probability this strategy is and how well it works. So going back to what I said at the start of the video, people are trying to call tops and bottoms. If you know where the tops and bottoms are and you can get in at those levels, you're pretty much getting in with zero or very little drawdown, and your entry's pretty spot on, and that's going to allow you not to keep messing up and getting stopped out unnecessarily. So I was able to use a 35 pip stop loss in this case, and first target was 70 pips, so that was instantly a 2-to-1 risk to reward. So 2-to-1 profit, great. So then what happens? Right, so again, this is what I want to talk to you about. This is brilliant, right? So we're consolidating and we are just, we're just finding some retracement. So when it starts doing this and it stalls, it likes a 50 number at 135.50. There we go. So we're seeing a bit of a nudge up. So we found some support. It didn't want to just go straight down there. Pound dollar is like that. It's fickle. So I'm always keen to take money, bank, and move my stop loss to break even. Okay, stop loss to break even. I've taken half of my position off. I've got a position running risk free. Now, if I get stopped out at break even, I might explore the possibility of re-entering again. If we haven't, been down to that 100% yet, because I'm confident that we are going to get down there. So you can faff about all it wants. So when it retraced up here, in this case, the beautiful thing about this strategy and the beautiful thing about knowing where the tops are and the bottoms are was that I was able to then say, okay, you know what? I am going to take another trade. And I remember, for those that were trading with me, we had a live session at the time. And we came in the next day. So we allowed, this was Monday, this was Tuesday consolidated. We went into Wednesday and it pulled back, and we were trading the start of the US session, and we had a retracement. So what do I do with the retracement? Right, so with the retracement, let's just pull it to here a minute so you can see. With the retracement, what I like to do is apply the fibs again. So we're looking to apply the 3 option rule. So what is the 3 option rule? Well, the 3 option rule is to look for a retracement that's either going to be 38.2 retracement, a 50% retracement, 618 retracement, or a 76.4 retracement. And so that they are these fibs here, which I'm putting back on so you can see. And the 76.4 is highlighted because I've got 764 strategy. It's just showing you just how powerful that is. Now, if I want to stay in this position, rightly so, I've moved my stop loss, I've identified this range, and I've said to myself, right, where's my 764? Well, it's at 136.65. So really, it has no business going above that 65 area. If I get stopped at 70, because there's about 5 pips in it, it might happen, so be it. But if not, that, I expect it to bounce off that 764 to get up there at the most and still stay bearish, because we haven't been down to test the 100%. We haven't done a full retrace, and we are seeing volume dropping on the awesome oscillator, and we have seen divergence. So here we've seen the divergence, and so what do? Okay, so it goes up, and I got in with the guys with the trading team as we were trading live, and we had 0 drawdown, And yeah, and it went up, and I said, okay, well, we'll take one. We'll take one up there. Actually, I got in a little bit later because it went up, hit the 76.4, and it went up. Well, did it go up there? Yes, it does. It goes up to the 764. So you could have scalped a little bit off the 618, which you can see. It's reacted off 618, but as with all of these trades, look at that. See, that's what it did. We got in on this move, and I remember, I think we got in at around 136, 10 or 15 or something. So it already dropped quite fast for us, too fast in fact. But I was like, look, this is a 764 strategy in play, and we're already in the trade looking for the divergent strategy. So we've added two strategies together, which is a beautiful thing about my strategies, is that I say to people, if you learn all three strategies and you put them all together, often you'll have what we call a hybrid strategy. So one powerful strategy where everything is just matching up and playing out beautifully. So we're making money here, and then that was Monday, and then Wednesday we're going to make some money here as well, just shorten it. First target's just back down to previous structure at 135.50. I'm not bothered about taking it down to 134.80 or 135, but I do. That's my T1 here, 135.50 area. So rounding up, because the low is 135.40. So again, I always like to round up. So 135.50 is ample for a T1. So that gives us about 50 to 60 pips. Nice. That's an average daily range as well, because if you look at 136.65 down to 135.50, again, it's a decent 100 plus pip move. So I'll do that, and then I'll set my T2 down here. So then I'll end up making money on this one and money on this one if it plays out. Again, in true fashion, what does a pound do? Well, it gives us some pips. It gets down and then it rejects. So it hits our T1, and then it goes back up, and it goes and hits our break even because we're in again. And just to give you some idea of what we did, we got in about here. We moved our stop loss. So again, where was our stop placement? Well, easy enough. In this case, stop placement was just above the 764. So again, with our 764 strategy, it just means that we don't have to have massive stop losses. The stop was just above. So, brilliant. But we're focusing on the divergence. We still have divergence very much in play because it hasn't taken out the high, and it hasn't stopped us out either. It's gone up to about 67, 68, something like that, but it didn't quite hit our stop, our entry, sorry. So it's still in play, still valid. So let's just continue. Okay, so it pulls back again, consolidation. Then we have this N shape, still bearish. It's still intent on being bearish and curling over slowly. You can see it's dragging its heels a little bit, but it's starting to curl over. This price action. You guys, anyone who's traded for longer than 5 minutes, as I say, you'll recognise this price action. This is what generally happens. The bulk of the money's made, and then you'll just have this kind of faffing about type of price action where it wants to, instead of just dropping in a nice sweet curl over like some instruments do, this one chooses, pound sometimes can do this, can consolidate. So consolidates for pretty much the whole week. But for me, because I understand the pound and I understand how it behaves, I can exploit this price action. I don't get frustrated. I want it to hit my target, sure, and I will get impatient and I will be like, oh. But at the same time, when it gives me an opportunity, so here it gave me an opportunity, I'll make money while I'm waiting for the target to be hit. So I'll get in again. So I've got one run in here, and I'll make some money here. And then when it goes back up like this, a really pronounced retracement back up. And again, you could plot your fibs, so do away with these ones. Whilst we're trading intraday, we could do this. So take that last swing high. This works. This works really well. Last swing high. Take that last swing low. Let's have a look. Where does it get up to? Well, touches 76.4, just about touches 76.4 of this range. So again, get in short at around 136.30, and I'm shorting it down again. So my third trade on pound dollar where I've made money consistently, all whilst waiting for this level to be hit. And will it get hit? Well, I'm confident it's going to get hit. So I'm going to keep taking trades and keep seeing setups. The longer it takes for it to get there, the more money I'm potentially making. All the while, I'm holding this divergence strategy is allowing me to make money because I'm holding and I'm applying my 764 whilst we're waiting. And so Powerful, really, really powerful, really accurate. By the end of this move, I've passed the FTMO and it's taken a week. So this is going from the Monday to the following Monday. So we had to wait until the following Monday. So let's see, what day was it? This was on the 3rd of January, and then we go right through the week until the following week, till the Monday. So 7 days, Monday to Monday. So there is method again to the madness, and it went down and it's hit target. I don't care if it's going to break on down through. That's fine by me. Like I've just explained to you, with regards to how price action works, it's going to go down and it is going to suck in. If there are people trying to take longs here, people will try and call the tops and bottoms again. I've just been making money shorting it, taking it back to this key support level. Some traders will wait for it to get to this level, and sure, you can trade with the momentum and go back up, and sure enough this would be the place to buy, but allow it to play out, allow it to find some structure, some support, and then allow it to go up from here. So what happens, sometimes it will do this, dip down, and then it'll break on through, which is what it's done here. But then you have to be careful, because what it might do is retest before being a change of trend. So it could be the start of a trend change. So this is why it's a good thing about this is what's good about the divergence. It does help you navigate price action, because you know that this could be the start. If it breaks this level, then you know that this could be the start of a down move. If it holds here, then you know we're still bullish and we're just going to go back up, and all we've done is we've managed to exploit some counter trend trading, but safely done in an environment that allows us to exploit this price action with purpose, with a strategy that does work, that has proven to work, and it shows that you can make money whether the market is bullish or bearish, just so long as you have a strategy and you know exactly what you're doing. I'd be looking, if it holds here, I'd be looking to put my stop below, and I'd be looking to take this long all the way back up to 137, because that's how we trade as well. So once we've made our money to the downside, knowing exactly why it stopped here and found support is because it's at previous structure and it's confirmed and it's gone all the way back up. So money being made short, and then we resume to the upside, no drama, bullish price action. The trend is your friend, and that's exactly what we did, and that's exactly where we took it, and made money that way as well. So money being made just trading one instrument. It's giving you enough trading the divergent strategy, bringing in the 764 strategy to exploit this price action within the range. And I hope you found this a very useful video explaining divergence and explaining how we use divergence to accurately call tops and bottoms. In this case, identify the top where it was exhausted. And yeah, if you have any questions, please let me know. All the links are going to be provided in this video, so feel free to get in touch. Get in touch on my Telegram, join my Telegram groups, and we also have a Discord group that you can join as well. That's just hit over 1,000 members. Everything we do is always free. There's no catch, there's no gimmick. We're going to give back over the next year or so, and then retire. So that's what we're all about. Hope you find, hopefully we'll make some successful traders out of you yet. Thank you for your time. Thanks for listening. All the best.